Good afternoon, everyone. Just wait for two more people to join in. So, how is your preparation going for the exams? Going good? Nice. So, are you like studying completely one subject a day or studying multiple subjects? What is your study plan? Multiple subjects. Okay. So, are you managing uh, theory and practical? So, theory subjects you will have to read and write. For subjects like income tax and GST, how are you practicing? Studying provisions and past question papers. So, in terms of past question papers, you're only studying, but just studying will not help because these are all practical papers. Okay, Swati, or any students, not specifically you, any student who are only studying based on the papers, you may feel that, okay, by seeing the question papers of the previous years, you may feel that you know this. But when it comes to working out, when a new question is given, then you may get puzzled, saying that, oops, this is a new question. Now your brains will not start working. So what you should do is for these practical questions, you should actually work out newer problems, not just previous year question papers. Okay. Like there are books which have a lot of questions. Okay. You have to buy such books and work out problems from there. You will have to solve it by yourself and then cross verify the final answer.
Okay, sir. I will change my plans.
Yeah, because you need to be more confident. So how will that confidence come? By because previous year questions are not going to get repeated, right? The rarest of the rare chances that okay, one or two questions may come up. But with the new provisions coming up in the GST law, you will definitely see that newer problems will come in. So any type of problem can come if we know the provisions and we are confident. Just two things are required. You don't need to have a same question. Like in our BCom exams, we used to see, okay, what we could study, that same question will come. So there the confident level, even if it is low, it's okay because you have seen that question. But in CA exams, you will see that just one question out of the whole question is some kind of repetition. But otherwise, it will all be newer questions which have been drafted because the guidelines which will be given to the paper setter also will be to be innovative and see that whether the student knows the provisions. That's the objective of giving you tougher questions. So you should work out newer questions, know the provisions. If these two things you know, then your confidence will definitely be to the next level. And even if it's a tough question, you'll see it with the eye lens of a known face. So you will easily solve it. Okay. So we had discussed major chapters. In last chapter, which is left, is the returns and the TDS and TCS provisions. Otherwise, all the other topics, what was due for us, we have covered. In the registration, what was required, that is covered. Exemptions, value of supply, time of supply, input tax, Then we have also covered payment of taxes, right? So we've covered the payment of taxes, and now uh, we have to do TDS, TCS, and returns. Oh, Swati, very nice to know that you're from Davangere. Very good. Very close to Bangalore. Hope we get a rank this time from Bangalore, Karnataka region. पेमेंट ऑफ टैक्सेस में इंटरेस्ट का टॉपिक नहीं हुआ था. ओके तो वो फर्स्ट कवर कर लेंगे. देन नो प्रॉब्लम. विल कवर अप द इंटरेस्ट पोर्शन फर्स्ट. देन okay. So we'll cover up what was missed out in terms of payment of taxes. Last time this was just missed out is what was said. So we'll cover up the provision of interest on payment of taxes. So if you pay the taxes before the due date of return, that's fine. If you pay the taxes late, then you have to pay interest on it. So how is the interest calculated? There is a provision under the GST law, which is section 50, which says that interest shall be payable in case where a person fails to pay the tax or any part thereof to the government for the period for which the tax remains unpaid, not exceeding 18% as may be notified. So if you are due to pay the tax, when are we due to pay the tax? You tell me. We have to file two returns. You know that GSTR-1 and GSTR-3B. So should I pay tax at the time of filing GSTR-1 or at the time of filing 3B? Come on, let's make this class interactive. In 3B, correct? So what is the due date for filing 3B? You all know this. We don't have to go to returns chapter only. So GSTR-1 we file by the 11th and GSTR-3B we file it by the 20th. So since I've disclosed my sales in one, shouldn't my interest be calculated from the 10th itself, from the 11th itself, because the due date of filing GSTR-1 is 11th. So my interest should start from 11th. Why should I start paying interest from 20th? Because my sales have already disclosed in GSTR-1, right? Everybody is saying, no, it is 20th. You're all so sure, but why not 11th? I'm disclosing the sales on the 11th itself. Abhishek is saying, but delay is from due date of 20th. That's what is my question. Why due date of 20th? 11th is also due date. So why can't it be for delay from the due date of 11th? Because payment due date is 20th. Okay. And what is 11th then? Tax is supposed to be by 3B form, correct? So whatever GSTR-1 we are filing, it is only a outward supply details. It is a outward supply statement, right? So it's a outward supply statement. So it is not a return. It is only a statement. And we don't pay taxes when we file any statement. We pay taxes when we file a return. What is the return? This return is GSTR-3B return. Once we are filing 3B return, that is when the due date starts. So the due date starts from 20th. That is why we have to pay taxes from the 20th. So if I file the return late, should I pay the interest? Yes, we have to pay interest. So we pay interest from the due date of filing the return. Okay, because my due date to file the return is 20th, I will have to pay taxes from the 20th itself. Okay. Now, coming, if I delay this tax payment, which I am supposed to pay. So as and when my return due date is there, along with the return only, I have to pay the taxes. Without payment of taxes, I cannot file my return. So you have to pay the taxes and then file your returns. Okay, that is fine. Now what happens? I have filed the return on time, no interest. I have filed my return late, then there is the interest. Then there could be cases when I have disclosed in the returns properly, but the officer has determined during his assessment that some interest was payable, some tax was payable, you have not paid. So then on that also interest is payable. So then interest is payable in multiple instances. So only filing late return is not for the instance. 50 subsection 1 says that's way interest shall be payable in case where a person fails to pay the tax. They have not said fails to file the return. Once he fails to pay the tax, it could be that he has not filed the return because of that reason. He has filed the return, but he's not included this turnover in the return. Or he has claimed input tax credit of X amount, which is more than what he should have claimed. He should have actually claimed 1 lakh rupees, but he's claimed 1,50,000 rupees. So all of these cases where he is claimed more benefit from the government or something is due by him to the government, in all such scenarios, interest will be payable. Okay, so in all the scenarios, interest will be payable. Interest shall be payable in case where a person fails to pay a tax or any part thereof to the government for the period from which that such tax or part thereof remains unpaid. So when will it remain unpaid? In that month when he did not disclose the details and that month's GSTR-3B. So from that date, he will pay interest not exceeding 18% as may be notified. And there is a notification which has said that interest will be at 18%. Now there is a new proviso which is inserted in section 51. New proviso means a section is there. Below the section, they mention as provided that. That is called as proviso. So a new proviso has been inserted here when it says that now let's take an example. Just one moment. Let me share a screen here. Okay. Now we are talking for the tax period March 2024. Okay. I have filed the return. In the return, my GST payable, okay, comes to 1 lakh rupees. Of this, I pay for the GST payable, I pay from the electronic credit ledger, ECRL. You know this, right? This is called as electronic credit ledger. I will pay from this 60,000 rupees, and from electronic cash ledger 40,000 rupees. Okay. So now my question here is, since 1 lakh was payable, now I have filed the return on 20th May. So is there any interest liable? If so, how much? Two months interest is payable. Why so? Interest liability, yes, everybody is saying yes, it has to be paid. But how much should be the interest liability, on how many months, and on what value? That also you have to tell me. Yes, sir. Swati is saying yes, interest is payable at 18% from 20th April to 20th May. Correct. Because the due date for March is April. So you cannot tell me to pay taxes before that. For March, the due date is April. So from April, I have to calculate and pay it up till 20th of May. Now the question is, yes, that it is for a period of 1 month. Now on what value? Abhishek is saying, sir, GST payable is 1 lakh rupees, but you calculate interest only on 40,000 rupees. Why? Isn't the GST payable 1 lakh rupees? Why should I pay only on 40,000 rupees? Bhumika is saying, no, sir, you're right. Pay on full 1 lakh rupees. Because that is what is payable. You're right, Bhumika. But others are also right, because the interest will be applicable not on the total liability. It will be, interest will be payable only on that portion of the tax which is paid through your cash ledger. 60,000, what we are utilizing from the electronic credit ledger, that need not be, interest need not be payable from that, because that credit is already there with the government, right? Your credit ledger is equivalent to your balance with the government, because you cannot just claim that electronic credit ledger balance that is there with the government. Okay. So that is the amount which is there with the government. You don't have to utilize it. What is not there with the government, that cash, what you will pay now. Correct. So whatever amount you are paying from the cash ledger, only on that you have to pay. So interest will be on 40,000 rupees at 18% into, that's all, 18% into 1 month. So what is the interest of this? $7,200. Is it correct? No, it's not correct, because This 18% is what? It is interest per annum or per month? It is per annum. So you have to do 18% into how many months delay? There's 1 month delay. So into 1 divided by 12, which is 600 rupees. So you have to pay interest of 600 rupees. Okay. So this is how you calculate the interest. And this is what exactly is told in our proviso also. The proviso says, the proviso says that charging interest only on the net cash liability, not on the gross tax payable. So we are not paying interest on full 1 lakh rupees. We are paying tax interest only on the amount what we have paid from the electronic cash ledger. Except in cases where proceedings are initiated under 73 and 74 and returned or filed subsequently. So unless if it's a notice case where a notice has been issued and based on that notice you're filing a return, then you have to pay tax on the whole liability, on the gross liability, on the gross tax payable. But otherwise, without any notice, if you yourself are filing your returns late, then only from the balance what you are paying from your electronic cash ledger, on that interest will be payable. Interest shall be calculated from the day succeeding the day on which tax was due to be paid. And interest shall be payable in case where taxable person makes any an undue or excess claim of ITC. That is what 50 subsection 3 says, that where interest shall be payable in case where the taxable person makes any undue or excess claim. So you were liable to claim 1 lakh rupees based on the provisions of section 16, but you have claimed 1,20,000 rupees. So 20,000 is in excess. So to this extent of 20,000 rupees, you have to reverse it because that is not your credit. You have wrongly taken it. So to the extent of 20,000 rupees, you have to reverse it and you have to pay interest also. So that is again notified as 18%. This was earlier 24. It has got amended. This is also now 18% itself. Interest, what is the important points? Clarification received that interest is payable on net tax and not gross tax. Interest is automatic and no discretion to the officer to reduce it. Sir, 18% is too high. Please reduce it. He can't reduce it because that's the rate given in the law. The tax officer cannot change it. In case of belated payment of tax, it should be paid voluntarily without payment, without any demand. Generally, when you file your returns late, you should yourself calculate the interest and pay it off. In case of any objection, then interest is payable on the final order, right? If there is any notice which has been issued and some tax is payable, then interest is payable on the basis of the final order. Interest will be debited to the electronic liability register. Whatever is payable based on the order, that amount comes and sits in your electronic liability register. From there, you make the payment. Payment can be settled by adjustment with balance in electronic cash ledger and not electronic credit ledger. What does this mean? So tax amount, what is due, whatever is the tax payable, that can be paid from the electronic cash ledger or electronic credit ledger. But interest, for payment of interest portion, you cannot utilize it from your electronic credit ledger. Why? Because electronic credit ledger can be used only for payment of tax, but electronic cash ledger can be used for payment of anything. So if there is any mistake in your returns and in the assessment, they found that there is a liability, you have to pay 50,000 rupees with interest. So this 50,000, you can pay it from your electronic credit balance. But interest, you cannot pay it from your electronic credit balance. You have to pay it from your cash itself. Correct, Abhishek. Interest cannot be paid by the credit ledger. Every person who is liable to pay tax in accordance with the provisions of this act or the rules made thereunder, but fails to pay the tax, or any part thereof to the government within the period prescribed shall for the period for which the tax or any part remains unpaid shall pay. So this is what 50 subsection 1 says. Now, what do you mean by gross liability and net liability? Now, the sales for this month is 15 lakh rupees. Purchase and expenses for the month is 10 lakh rupees. So what is the gross liability and what is the net liability here? Gross is 15 lakhs, net after utilizing ITC is 10 lakhs. Okay. Only sales is gross liability, sales minus purchase is net liability. ठीक है स्वाति, but ಎಷ್ಟು ಅಂತ ಹೇಳ್ಬೇಕಲ್ವಾ? Gross liability ಎಷ್ಟು, net liability ಎಷ್ಟು ಅಂತ ನೀವು ಹೇಳ್ಬೇಕು amount. So what I meant to tell her was, tell me the amount. Just don't tell me theoretical things. We have given numbers, so you have to tell us numbers then. So everybody is saying that gross is 15, net is 5. Everybody, but except one answer, Pooja, who's given a correct answer, everybody answers is wrong. The liability arises from the tax and not from the value of sale. Here clearly it is mentioned this is the sale value. Have I given you the tax on this? This is not the tax. This is only the sales value. On this, you have to calculate the tax. Now, Pooja has assumed a tax of 18% and then she's told gross liability of 27 lakhs. Pooja, you should also have asked a question that what is the tax rate? But otherwise, your assumption is correct. Based on assumption that it is 18%, your gross liability is 27 lakhs and net liability is 9 lakhs. That's the correct answer. Okay. Now, so always ask what is the tax and then tell me the answer. Just value of sales is not correct. Okay. Now, second example. So first example, we learned gross sales is not gross liability. Sales minus purchases is not net liability. The tax on that is what is relevant. Okay. Point number 2, output tax. So this is separate and this is separate. So don't tell me that, sir, on 15 lakhs, 18% is not 2 lakh 70. I'm not asking that. That's a separate question. This is a separate question. So in the second question, output tax is 2 lakh 70,000 and input tax is 167. Okay. What is the gross liability and what is the net liability? Gross is 270 and net is 1,03,000 rupees. Correct. So we know that when we have to pay any tax, we will pay interest in this case on what value? You will pay interest on net liability, which is 2,70,000 minus 167 on 1,03,000 will pay the interest. This is section 50, subsection 1. Then the proviso again reproduce here. Okay. Now say for the month of, to calculate the interest, I have assumed the month of April 2019. Due date we know is 20th May. So in these particular cases, tell me what is the interest liability. Gross is 10 lakh rupees and ITC is 7 lakh rupees. ಸ್ವಾತಿ ಅವರೇ ಕ್ಯಾಲ್ಕುಲೇಟ್ ಮಾಡ್ತೀರಾ? Bhumika is calculated, yes, 30,000 rupees. No interest, correct. There is no interest liability on this case. Anybody having doubt why no interest liability here? No doubts. Case number 2, payment and filing done on 28th August. Gross output is 10 and ITC is 7. So what is the interest payable on? ಗೊತ್ತಿಲ್ಲ ಸ್ವಾತಿ ಅವರೇ, you ಹೇಳಿ. Abhishek is saying 14 rupees 65 paisa. Okay, it got deleted it actually. RN is saying 14,797. Interest is on 3 lakh rupees because my output tax is 10 and my input tax is 7. So net is 3 lakhs. 3 lakhs into 18% interest into number of days. Okay. So the number of days you have to calculate into 100 divided by 365. How do you calculate the number of days? From the due date, which is April is 20th May. So from 21st May it will start. From 21st May till the 28th August makes it 100 days. So you calculate 3 lakh rupees into 18% into 100 divided by 365. That will be the answer. 9 full month part month barala. Number of days consider ಮಾಡಬೇಕು. 14,795. Correct. So correct answer is 14,795. Okay. Now rule 88B and 88B1 and 88B2. What does this rule 88B1 and 88B2 in case of interest says? That is, if the tax has been belatedly paid through credit balance on account of delayed filing before commencement, then interest is to be paid for the period of delay in filing the said return beyond, and tax which is paid by debiting the electronic cash ledger. That is what we have done. Now, in any other cases wherein the period, wherein in other cases means when you have reported your sales of this month in the next month. Okay. In that case, you will not get this benefit. Okay. So the benefit what we are paying by utilizing the how much of a credit has been paid, that benefit we will not get in case the sales of this month is not reported in the return of this month. If you report the sales of this month in the return of next month, then this net tax benefit you will not get. You will have to move it to the next month because you have reported late. So you will pay tax on the whole taxable value. That I'll give you talk through an example. Then where interest is payable on the amounts of ITC wrongly availed, then interest is calculated on the amount of input tax which is wrongly claimed. So how do you make sense of this is April month sale. You have declared it in the month of April. What value of sales? 10,000 rupees. And actual filing days in 1st of June. So what is the interest which will be calculated on? I'm not telling you to calculate the interest. Just tell me interest will be calculated on what value? On 4,000. Correct, Swati, very fast too. So interest will be calculated on 4,000 rupees. Now in next scenario, you tell me interest will be calculated on what value? Second case, so Swati is saying you will calculate interest on 5,000 rupees. Any other views? Because only you have utilized only from your cash ledger. But any other views? Pooja is also saying 5,000. So you are not finding any difference that the supply was pertaining to the April, so they have declared in April. Now March I'm declaring in April, but still you're saying the answer is same. ಫುಲ್ ವ್ಯಾಲ್ಯೂ ಅಂದ್ರೆ ಎಷ್ಟು 10,000 ರೂಪಾಯಿ 15. Okay, anybody else? Any other answers? ಮಧ್ಯಾಹ್ನ ಕ್ಲಾಸ್ ಇದ್ರೆ ಹಂಗೆ ಎಲ್ರು ನಿದ್ದೆ ಮಾಡ್ಬಿಡ್ತಾರೆ. Interest will be calculated on what value? ಯಾರು ರಿಪ್ಲೈ ಬರ್ತಾ ಇಲ್ಲ ನೋಡಿ ಮತ್ತೆ. In this case, March month sales, I have not reported in March, I am reporting it in April. Then the interest will be on the whole 15,000 rupees and not on 5,000 rupees. That is what Rule 88B1 is saying, that when you have to calculate interest for such cases, you will have to consider the value of gross liability, not on the net liability. Clear? Oh, today is a mock test paper also. Okay. Bad luck. Okay. Might be they will miss this class. Okay. Then other things, okay, transfer of credit and things. Now we'll go back to TDS and TCS. Okay, understood everything clearly. Interest, so even though it's a small topic, so much of relevance it has, because in any question you may get the aspect of this interest. Okay. Now TDS and TCS is, how do you know this TDS and TCS? Very simple. TDS is basically tax deducted at source, which is an Indian withholding tax, which means collecting tax on income, dividends, what we generally know under income taxes. That I will tell you, that when an invoice is for 1 lakh rupees, then payment to the government from that invoice. So I am a purchaser. You have given me your invoice. Your invoice value is 1 lakh rupees. Now from that 1 lakh rupees, I will have to make you payment of 1 lakh. But what is happening is, I will withhold some amount from whatever I have to pay. Government is saying, boss, you have to make payment to this person. Don't make him full payment, because this person will run away. So I don't know whether he'll file his income tax returns or no. So you withhold some amount. ಎಷ್ಟು withhold ಮಾಡ್ತೀನಿ? I will withhold 10,000 rupees, which is 10% generally, and I will remit it to the government, and balance 90,000 I will pay to the vendor. Vendor will ask, you have paid me less. I'll say, yes, government has told me to pay less because they have to get a interim levy. So this interim levy is called TDS. I have paid 10,000 to the government. Go file your return, and then you will get this refund from the government. So the seller cannot say anything, because that's a regulation which is imposed by the law, which says that sales should be 1 lakh rupees, TDS should be 10,000 rupees, and then we have to make the payment to the vendor of 90,000 rupees. Okay. That is how TDS works in income tax as well as in GST. Now, what are the advantages of TDS? General understanding ಅಲ್ಲಿ. ಸ್ವಾತಿ, ನೀವಿಬ್ರು ನಾವು ನೀವೇ ಇದೀವಿ ಅನ್ಸುತ್ತೆ. ಫುಲ್ ಕನ್ನಡದಲ್ಲೇ ಕ್ಲಾಸ್ ತಗೊಂಡ್ಬಿಡೋದಾ? Okay. What are the advantages of TDS? ಇಲ್ಲಮ್ಮ, ಬೇರೆಯವರು ಇದ್ದಾರೆ, ಹೊಡಿತಾರೆ, ಆಮೇಲೆ ಕಂಪ್ಲೇಂಟ್ ರೈಸ್ ಮಾಡ್ತಾರೆ. Advantages of TDS is, there is regular flow of income to the government. Kyuki when the end of the year you will file the returns, till then what will happen? Till then government cannot wait. So they will tell, deduct the TDS and remit it to the government, so that government also will keep getting the money in installments. Otherwise they have to wait till the year end till you file your returns. That's why the advantage of TDS is, it is a regular flow of income to the government. Before the filing of the returns only, they will get their revenue. Then audit trail is created. You have supplied to me, I have deducted tax and paid to you. So which established that whether you have sold goods to me, whether you have declared in your returns or no, will get identified by my entry, that when I made an entry as TDS payable to you, which will mean that there is a transaction. So you are forced to declare that sales. ನೀವು ಬಚ್ಚಿಟ್ಕೊಳ್ಳಂಗಿಲ್ಲ. You cannot hide that sales because your transaction is reported to the government. So that creates a audit trail. Okay. Then it expands the tax net. People who are not filing the return, they're only supplying, and you have under a liability to deduct the TDS. There are some people who have to deduct TDS. That is, when you're supplying it to the government, supplying it through e-commerce, they have to deduct those TDS. So once they deduct TDS, then you are forced to claim that as a refund. So how will you claim that refund? By filing your returns. So you are forced to file your returns, and if you are not registered, you are forced to register. So you will register and pay the taxes. So that's how the tax net is increasing. So whoever are unregistered, they will also slowly start getting registered. Then fourth point is with integration of data, there exists an audit trail. So this is what I said, that all the data gets integrated, gets reported to the portal, and that creates a complete audit trail. Audit trail andre full transaction will be disclosed, and who supplied to whom, what value, everything will be disclosed there. What is difference between TDS and TCS? TDS is under GST is deducted under section 51, but TCS under GST is deducted under 52. So there are two separate sections. 51 is for TDS, 52 is for TCS. TDS refers to tax deducted when recipient of goods makes payment to the supplier. But TCS refers to the tax which is collected by the e-commerce operator. TCS refers to tax which is collected by the e-commerce operator when a supplier supplies goods or services through its portal. When you buy anything from Amazon, for example, the payment goes to whom? You have done e-commerce shopping, right? So when you do shopping of a handbag, who is the seller? It goes to the e-commerce. It doesn't go directly to the actual supplier of goods, Swati. It goes to the e-commerce. Then e-commerce disperses it to the supplier because supplier is only placing his product. When you make the payment, you don't find a link of the supplier. You find a link of the e-commerce player. This e-commerce player will collect the money. He has control. From that amount, he will pay to the supplier. Since he has to pay it to the supplier, he will collect some tax, which is called as TCS. That's why it's called as tax collected at source. He's not withholding, he's collecting some tax. So he'll collect that tax and pay it to balance to the supplier. So again, their audit trail is established. Correct? So that's the difference between TDS and TCS. Where is the TDS reflected? Both of them, TDS and TCS, will be reflected in the electronic cash ledger of the deductee. In this case of TDS, it will be deducted in the electronic cash ledger of the deductee. In case of TCS, it will be reflected in the electronic cash ledger of the supplier. Okay. Now getting into TDS, who is liable to deduct TDS? Any department or an establishment of a central government or state government or a local authority, government agency. So basically, whoever are of the government ranking, department or an establishment of the central government or state government, any local authority or government agency, if you are supplying anything to them, then these people have to deduct TDS. Any other person or category of person as may be notified by the government on the recommendation of the GST Council. So in these cases, TDS has to be deducted. Okay. So in a private transaction, like in income tax, we'll see when you supply to any company, proprietorship also, partnership also, they have to deduct TDS. But in case of GST, TDS will not be deducted by anybody and everybody. It will be deducted only when you make supply to the government authorities. Deductors notified by the government is an authority or a board or any body which is set up by an act of the parliament or state legislature, established by the government with 51% or more participation of equity by the government. So generally government authorities, or a society which is established by a central government or state government or any public sector undertakings. In such situations, we will be considered that these people have to deduct TDS. Category of persons who are not liable to TDS is when goods or services are supplied from a public sector undertaking to another public sector undertaking. So one PSU to another PSU, no TDS. And when supply of goods or services takes place between one person to another person, that is between one government authority to another government authority, no TDS. So what does it mean? In a broader picture, from one government to another government, no TDS. But when a private person files it to the government, sells anything to the government, then TDS will be deducted. Okay. Deductees. Now, whatever value I'm supplying, will they deduct? No. The value limit is 2,50,000 rupees. When I supply up to 2,50,000 rupees or above, then only TDS will be deducted. Sanna putta amount ke TDS barala. So up to 2,50,000 rupees, no TDS. Above 250 rupees, 250 TDS will be deducted. This value is exclusive of tax and cess as per the invoice. Standard rate of deduction is 1%, which is under CGST. Under SGST, 1%. So TDS rate will be 2%. No TDS where the location of supplier and place of supply are in the same state, but place of the recipient of supply is in another state, no TDS. This is very important. This is the crux. When TDS will be deducted where the location of supplier and place of the recipient is in the same state, which I've mentioned here in negative manner, where the location of supplier and place of supplier are in the same state, but place of the recipient is one who is important, right? If the recipient is in another state, then no TDS. Recipient also should be in the same state, then only he will deduct TDS. Why? Because he will always deduct CGST and SGST, right? So if he has to deduct that, the supplier also has to be in the same state. If he's in different state, if the recipient of supply and location of supplier are in different state, then it will not be possible. Let's understand this with the example. TDS is to be deducted or not where the location of supplier, place of supply and recipient are in the same state. TDS deduction will be there or no? TDS is deductible because location of supplier, place of supply and recipient are in the same state. So TDS is deductible. What is it deductible as? CGST and SGST because location of supplier and place of supply are in the same state. Second example where the location of supplier and place of supply are in different states. Then also deductible as IGST because location of supplier and place of supplier in different state possible. So IGST will be deducted. Third instance, where the location of supplier and place of supplier are in the same state, but recipient is in a different state. No TDS. Correct. Which means what? If I'm doing any project in Karnataka, in Davangere, if I'm doing any project for a different state government, then that state government will not deduct TDS because the place of supply will be in Karnataka. I'm doing some service in Karnataka for them. Okay. If the place of supply is in Karnataka, then they cannot deduct TDS. If the place of supply is interstate, then they can deduct it. Okay. So simply we say that what is CGST and SGST transaction where the location of supplier and place of supplier in the same state, then it is CGST and SGST transaction. That way we cannot simplify this. We have to see that whether the location of supply, place of supply and recipient, all these three are relevant to decide whether TDS is deductible or not. Got it? So if you are getting any project from your own state government, you are in the same state, TDS will be applicable. If you are getting project from another state government, because TDS is generally deducted by the government, if you're getting any project from another state government, if the place of supply is if the place of supply is IGST interstate, then TDS will be applicable. If it is in your state, then TDS will not be deductible. Correct. Very right, Pooja. In this case, since recipient cannot claim ITC, so TDS is not deductible. Because the main objective is TDS should be deducted and another person should get it, right? So in this third scenario, if they deduct TDS, they cannot remit it in my state. That's why it is not applicable. I've given the answers here, but just understand the situations. Location of supplier is Kolkata. Place of supply is Kolkata. Place of recipient also is in Kolkata. What GST he will charge? Location of supplier and place of supply same state. He will charge CGST and SGST. TDS applicable? Yes. Percentage of TDS? 2%. As C plus S. Location of supplier Kolkata. Place of supply Jharkhand. Place of recipient also is in Kolkata. So location of supplier and place of supply are in same state. So TDS is applicable at the rate of 2% because it is a IGST transaction. Because for charging GST, we'll see location of supplier and place of supply. Since they are in two different states, IGST is chargeable. Third scenario, location of supplier is in Kolkata, place of supply also is in Kolkata, but place of recipient is in Bihar. मतलब बिहार का गवर्नमेंट क्या दे रहा है? कोलकाता के बंदे को काम दे रहा है और बोल रहा है आप जीएसटी चार्ज कीजिए. मैं बोलूंगा आपने मेरे को इमूवेबल प्रॉपर्टी वर्क रिलेटेड काम दिया है तो मैं आपको आईजीएसटी चार्ज नहीं कर सकता हूं. आई हैव टू चार्ज सीजीएसटी एंड एसजीएसटी. In that case, will TDS be deductible? No, because if I charge CGST and SGST, he cannot deduct IGST. Correct? So here TDS is not applicable. Clear till now? Correct, Alva. Okay. What is the procedure happens post deduction? TDS has to be deducted. It's been deducted. What happens after that? Deposit the tax to the government account by the deductor by the 10th of the succeeding month. So you have to deposit the tax to the government account by the 10th of the succeeding month. Then TDS certificate is to be issued in form GSTR-7A. That the person who is deducted, he has to give a certificate in GSTR-7A. If not deducted on time, then he will be liable to interest. So generally, TDS defaulters, they have to pay interest, same as per section 50. Amount of TDS will reflect in his electronic cash ledger. The person on whose behalf TDS has been deducted, in his electronic cash ledger, this TDS will reflect. A person required to deduct TDS shall submit an application on the common portal. That he has to take a separate registration. Next, TCS. What is TCS? Any e-commerce operator, if you're doing any transaction, they will deduct some amount called as TCS. Now, to understand, do we know what is e-commerce, or do we need to understand that? Chapter 3 ಅಲ್ಲೇ ಅರ್ಥ ಮಾಡ್ಕೊಂಡಿದ್ರಾ? ಓಕೆ, ಬೇರೆಯವ್ರು ಏನ್ ಮಾಡಿದ್ದಾರೆ ಗೊತ್ತಿಲ್ಲ. ಸೊ ಫಾರ್ ದೇರ್ ಬೆನಿಫಿಟ್, electronic commerce operator means any supply of goods or supply of services which is supply of goods or services or supply of goods and services, anything is possible, including digital products over digital network or electronic network, is called a e-commerce transaction. So e-commerce transaction means supply of goods or services or both, which is through a digital network and electronic network. It is called an e-commerce transaction. Now, who is the e-commerce operator? E-commerce operator means a person who owns, operates, or manages this digital electronic facility platform for electronic commerce. Okay. So e-commerce operator means any person who owns, operates, or manages this digital or electronic facility or platform for electronic commerce. He is called a e-commerce operator. Now in e-commerce operator, what happens? There could be two types of supply, which is supply of goods through e-commerce will be subjected to TCS, and supply of services happens through e-commerce. Here also, if there is any notified services, then e-commerce operator has to pay GST. Like we know what kind of transactions, these are the kind of transactions on which e-commerce operator has to pay tax only. So when you use the services of transportation of passengers by radio taxi, motor cab, maxi cab, Uber, Rapido, Ola, any of these things when we use, okay, omnibus or any other motor vehicle which we are using, in such situation, what happens? This Uber or Ola will pay the tax because the operators, this taxi fellows, auto fellows, they will not pay any GST. So in such scenario, what happens? This e-commerce operator will pay the taxes on their behalf. They will collect it from the customer and pay it to the government. Second scenario is service by way of providing accommodation in hotels, inns, guests, etc. Except where the person supplying the service through e-commerce is liable to registration. So if I am a hotelier, I am listing my hotel on Airbnb or kind of make my trip. So they are all e-commerce operators for accommodation facilities. So when I provide accommodation facility through a e-commerce operator, there also e-commerce operator will pay the TDS, will pay the GST, not the TDS, full GST itself they'll pay. Then services by way of housekeeping, plumbing, carpentering. Means what? When I book a urban clap, so they'll come for plumbing, carpenting, housekeeping services. They will not pay GST. That urban clap will pay, and I will pay to the urban clap itself. So on their behalf, this e-commerce operators will pay. Fourth and new addition is supply of restaurant services. So when I supply restaurant services, then this restaurant will pay the GST. So these are the four categories of services which will fall under this head. This is this head, notified services. So in case of this notified services, who will pay the GST? In case of these notified services, GST is paid by the e-commerce operator. Okay. So this notified services persons will pay the GST on the e-commerce operator. And these people will not pay TCS again. So it will not be double taxation. When the tax itself is paid on the transaction by the e-commerce operator, then why again TDS? No TDS. So only on other services or supply of goods through e-commerce, then TCS will apply. Clear here? So I'll give you an example. I am supplying, say, insurance services through policybazaar.com and I'm getting a customer. Now the customer pays to Policy Bazaar and then it comes to me. So in that case, if the insurance policy is 10,000 rupees, who will pay the tax on that 10,000 rupees and who will pay TCS on it? Insurance company will pay the tax, correct? First answer is correct. E-commerce operator will pay TCS, that is correct. So the tax on the policy, that is the supply of service, is happening by the insurance company and TCS will be paid by the e-commerce operator, correct? Because it is not under specified service. Now if I book a cab, okay, for 500 rupees, on that who will pay the tax and who will pay the TCS? e-commerce company will pay GST and no TCS. That is what Swati is saying. That is what Abhishek is saying. Any other counter view? Correct. No counter view. So in case of this notified services, the e-commerce operator will pay the GST and TCS will not be applicable. Sarina? TCS applicability in major types of e-commerce where you are selling your own products through your website. Now, e-commerce means everything what is sold online, you feel that it is e-commerce. Now, whatever you sell online, that doesn't not mean that it is on e-commerce. So there are different types of e-commerce which happens when you're selling your own products to your own website. Their TDS provisions is not applicable. Their TCS provisions is not applicable because you yourself are selling it. There's no e-commerce person who's applicable. You are selling it on your own website. No TCS applicability. Selling bought out products through own website under own billing. Okay. So you are buying products and you're a trader. So you bought it and you're sold it on your website. Still, TCS provisions is not applicable because you may sell your own products or you can sell brought out products. Doesn't matter. As long as the buyer is buying from your own website, no TCS question. Okay. Third scenario is where a mere facilitating the transaction, you are not having your own goods, you're not buying the goods. Your operator do not own goods, billing directly by the seller to the customer, and consideration is collected by the operator. So this operator or this e-commerce is merely facilitating the transaction between customer and seller. Such kind of e-commerces will do, their TCS will be applicable and the operator will deduct TCS while making payment to the suppliers. So of this three kinds of e-commerce transaction, only on the last leg of transaction, you see that TCS is applicable. So whenever you sell it through your own website, you brand it nicely. You sell products, services through your own website, no TCS will come. Standard rate of deduction is 0.5%. Effectively, TCS will be 1%. Okay. Aggregate value of taxable supplies of goods or services other than notified services under 9(5) by all registered persons supplied through operator minus taxable supplies of returns, because a lot of returns you give, right? How much you don't order, that much you will return off. Correct? The main advantage why we buy from e-commerce is that we have this facility of return. Since we have this return facility, we will use it for one day and then return it. Correct? So the net value of taxable supplies is that value on which the tax will be payable. TCS, nutshell, person liable to collect TCS is e-commerce operator only. TDS is government. TCS is e-commerce operator. Is there any threshold limit? I've sold only 50,000 through e-commerce operator. Still they will deduct TCS, huh? Or the 250,000 limit will apply. Somewhere we are read, right? So will 250 apply or no limit will apply? $250,000 for TDS and TCS, no limit. Very good, Swati. Bhumika, right? No limit for TCS. There is no threshold limit for TCS. The limit is there for only TDS. Rate of collection is 1%. Value will be net value, not the gross value. Sales minus the returns net value. Due date for payment of TCS will be 10th of the end of the month. So that e-commerce company has to be very careful. What are the transactions happen on that? They have to pay within 10 days the TCS amount. So that was all about TDS and TCS. Simple chapter. So next we will go to the final topic, which is returns. ಸೊ ಇಲ್ಲಿ ಬ್ರೇಕ್ ತಗೊಳ್ಬಿಡೋದಾ ಆಮೇಲೆ ತಗೊಳ್ಳೋದಾ? ಬ್ರೇಕ್ ಬೇಕಾ? Okay, so we'll take a break here. Then when we come back, we'll complete the chapter of returns. Returns also, there's not much. What we'll do is we'll start discussion on the returns aspects, and then we will have also a lot of MCQs on this. So we'll discuss the MCQ as well. 4:15 approximately. By 4:25 we'll catch. Yeah, can we start? Okay, so we were discussing on 1 minute. On the returns portion. Okay, returns is very simple. We know the returns, but we'll have to understand the intricacies, what all details is there. The returns are basically information given by the department because this is self-assessment. The important section under GST is this self-assessment itself, which says that you have to do assessment of your returns. Not only file the returns, you have to do assessment of your returns and file it. So first level of assessment, you are doing it and filing it. There are different types of returns for different categories of people. Okay. There are different people, so different categories, regular taxpayer, non-resident taxpayer, composition taxpayer, UIN, different taxpayers, different returns. Return should provide facts. That is very important. Should not have interpretation and other issues. Just give the facts and the numbers. You have made a sale. So for that sale, pay the tax. Simple. Return should only give the facts. Specific format is there. Format is specific. Unlike invoice, where the format is not specific, only the requirements are specific. But in returns, the format is specific. What is the purpose of the return? To share information to the government, compliance verification, finalization of tax liabilities, providing necessary inputs for the government to make decisions saying how much is the tax being collected, which area has been collected, which state. All of that information goes through the returns. It is management of audit and anti-evasion, so that somebody is filed the return but not paid the taxes. So it helps to check that aspect also for the government. So that is the basic reason of the return. Now, what are the various types of returns? You have to first furnish a outward supply, that is in the GSTR-1 format. Outward supply is, even though not a return, it's just a statement, but since it is kind of a compliance, that's why I'm putting it here. Because अभी हमने थोड़ी देर बाद पहले बोला था कि GSTR-1 is not a return. तो फिर सर आप रिटर्न में क्यों डाल रहे हो? Because return also is one kind of a activity. That's why we are putting it under return. But return GSTR-1 is not a return. It's just a statement. Actual return starts here when we file GSTR-3B. GSTR-3B is being filed. After 3B is being filed, then we file GSTR-4. A regular taxpayer will file GSTR-3B. A composition taxpayer, he will file annually only one return. GSTR-3B can be filed when? When can GSTR-3B filed? Come on, give your answers. 3B is to be filed 20th of the next month. It is to be filed before 20th of the next month after furnishing R1. ಅಷ್ಟೇನಾ? ಬೇರೆ ಮಂತ್ಲಿನೇ ಫೈಲ್ ಮಾಡ್ಬೋದಾ? ಕ್ವಾರ್ಟರ್ಲಿ ಫೈಲ್ ಮಾಡೋಕೆ ಆಪ್ಷನ್ ಇಲ್ವಾ? So, Pooja, only monthly to be filed. We cannot file it quarterly. There's no option for quarterly, is it? Composition payers, correct. So 3B is the return for monthly filers and the quarterly filers also. So we know this QRMP schemes, they have to do quarterly returns, monthly payments. Correct? So they have to do QRMP, quarterly returns, monthly payments. So they will make payments monthly and they will file this quarterly returns in this 3B return itself. Composition pay quarterly illa. Composition, the QRMP is quarterly returns, monthly payment. So payment you will pay through challan, no return for that. The quarterly returns, what you file, that will be through quarterly returns, which is called as quarterly GSTR-3B. Correct, Bhumika. For monthly taxpayers, end of the month, 20th of the month, not end of the month. And for QRMP, month 20th of the month succeeding the end of the last month of the quarter. Correct. Okay, so GSTR-3B for monthly filers monthly, quarterly filers quarterly. GSTR-4 for composition taxpayers, this is on a annual basis, super specialty thing, special case that they will quarterly pay the taxes and annually file one return, composition taxpayers. And GSTR-5 NRTP non-resident taxpayers, for them it is a monthly return. What are the other returns? The first return is called as a first return. GSTR-8 for statement of TCS. Annual returns. Every person who's having a threshold limit of certain limits, they have to file annual returns. GSTR-9, 9A, 9B, 9C. Final return will be filed in GSTR-1, and UIN holders, they will file GSTR-11. All the returns has to be filed electronically. There is no manual return. Okay, all the returns under GST are electronically filed. Two aspects of filing returns. Once you do your return, you are doing your works properly, but that is one aspect, that you have to be compliant and things like that, pay the taxes on time. But it also helps the other person because he has to claim the credit. In 16(2)(c), one of the condition is the supplier has to pay the taxes to the government. How? Through filing the return. Once you file the return, only then the recipient will be able to claim the credit. So that's why the recipient's credit is also dependent on you. If you file the returns on time, then the recipient can claim the credit. GST returns, how will you file? I'm running fast. Is it fine? Because this is all what we know. We are just doing a recap, correct? How will we file the GST returns? Through the portal. Portal website is very simple, gst.gov.in. Fine. And then upload these offline utilities provided by GST. If you have multiple data, you can upload through a offline utility called JSON file. You can integrate your systems through GST providers called as GST providers. They will do the integration between your accounting systems and the GST portal. That is also possible. Then what is the statements? What we'll start off with. First is statement of outward supplies, which is given in section 37, that is GSTR-1. Here it is only furnishing of details of outward supplies and not a return. Only your sales you have to report. Okay. Sir, only sales I will report. So I am paying reverse charge. So reverse charge I am paying. Supplier is supplying to me. Outward supply also I pay the tax. Reverse charge also I'll pay the tax. So reverse charge also shall I apply? Shall I upload it here? Yes, Pooja, Swati, Bhumika. Here it is what is to be uploaded. Correct. Oh, Swati saying yes, we will pay ITC on reverse charge. That's correct. But should I report in GSTR-1? No. I should not report in GSTR1 because GSTR1 is only furnishing the details of outward supplies. Only your outward supplies is what you will disclose. In RCM, it is not an outward supply, it's an inward supply. So you don't have to disclose it here. You have to only disclose outward supplies here. This is not a return. So you will only disclose whatever outward supplies you're making. Okay. It has to be furnished in form GSTR1, and based on this GSTR1, GSTR-3B will be filed. By when you have to file? By 10th and the law. But there is a power given saying that the commissioner can extend it. So this person has extended by 11th for everybody who's having turnover more than 5 crores, and 13th of the end of the quarter for people who are having less than 5 crores. That is for QRMPs. Okay. So the GSTR1 due date effectively is on the 11th itself. Furnishing details. GSTR1 has to be filed by every registered taxer person, but excluding these people. So these people will not file GSTR1. Input service distributor, NRTP, composition scheme payers, TDS, TCS, OIDR. These are the category of people who will not file GSTR1 because this doesn't help in giving the credit. So these people, GSTR1 is not applicable. QRMP scheme people, they will file the return quarterly. Correct. So a person who has paid, who has raised an invoice and have paid him, I will not get credit because he will file his returns on a quarter end. So 2 months my credit will get blocked because if it doesn't appear in my GSTR-2B, I cannot claim the credit. Correct. So what will I do? The government has said source, whoever are filing quarterly returns, you are not giving credit to the customer because you're filing your return at the end of the quarter. So what you do is you do something called as payment monthly, but for such persons who wants the credit, we'll give you a facility called Invoice Furnishing Facility. This is called as IFF, Invoice Furnishing Facility. So for the first 2 months, don't file GSTR1. In this third month, what you will file? You will file GSTR1. Correct? Third month, you will file GSTR1, fine. But for this first month and 2 months, second month, you don't have GSTR1. So we'll give you a facility called as IFF. This will be equivalent to GSTR1, but in GSTR1, all your outward supplies you have to submit, B2B, B2C, everything. But here, Baba, you only upload your invoices, credit notes, and debit notes of supplies made to registered persons. In the first 2 months, what you do, you only supply details of whatever supplies you made to registered persons. Okay. This will not be binding on you. If you miss something here, you can put it in GSTR1 because this will get interlinked here. So only those customers who are shouting at you, saying that give me the credit, their details you will practically upload in IFF. So you upload in month 1 and month 2 in IFF, and month 3, don't upload IFF because IFF is only for interim. In third month, you upload GSTR1. Okay. And whatever invoices you have already uploaded in IFF, don't upload that again because that will already come in your automatically in GSTR1. So month 1, month 2, IFF, month 3, GSTR1. All this data then will get reflected in GSTR2A, 2B, 4A, 6A of the recipients. Clear? This we are aware. Then furnishing details, invoice can be uploaded anytime between 1st and 10th, but the recipient can download it only after everything is uploaded. So there is nothing called verification as of now. Now there is a facility called invoice management system, but for your exam that will not be relevant. So you have to upload the detail in GSTR1 and the recipient has to only see it in his GSTR2B. Should you scan and upload the invoices, or should you give item-wise details in your GSTR1? Item-wise details, correct. So you don't have to give upload all that invoice copies and things like that. They don't need so much of data. Your invoice, you keep it. The data from the GSTR, from your invoices, item-wise you will not upload. Rate-wise you will upload. Okay. You will upload the details rate-wise. How much is 12%, 5%, 8% for one invoice. So put the invoice number, put the rate-wise category, value, and the tax. That is what you will upload. Okay. Invoice can be modified, deleted any number of times till the 11th. After that, you can't do it. In case of Schedule 1 transaction, the taxable value has to be worked out as per the valuation rules and updated. Because for Schedule 1 transactions, you're not raising an invoice. So you will give these details. What else you will give? Description, product name, color, etc. not to be uploaded. Only HSN code you give, that is sufficient. Question by Abhishek is, if anyone opts for QRMP and filed IFF and purchaser takes the ITC, what if the person doesn't file the 3B and doesn't pay tax? That is applicable for any other case also, Abhishek, that I file GSTR-1 and I don't pay the tax, what will happen? So there is a scheme called as claiming of the credit by the recipient, provided the supplier files the return. So he will wait, okay, because if based on the GSTR-1 and IFF, the recipient will claim the credit, but by September of the end of the subsequent month, by after the end of the year, the next September, till then he should have filed a GSTR-3B. Even then, if he doesn't file, then the recipient has to reverse the credit. Just based on GSTR-1, if he claim the credit, that is not sufficient. There is a provision in the law which says that the recipient will have to reverse the credit if the supplier has not filed the GSTR-3B. Why? Because just GSTR-1 or IFF doesn't mean that return has been filed and taxes has been paid. Okay, that is not a completion there. So the recipient will have to check that if the supplier has filed the returns, then only he can be assured that he has returned, his claim is correct. You're right, your question is very valid. How will I know if he's paid the taxes or not? Just GSTR 2A or 2B is there. That is not sufficient. But the end of the year, there is an option in GSTR 2A which shows what is the status of the return filing of the supplier. If he's not filed it, then you will have to reverse the credit, because it is your supplier whom you're dealing with. So the government is saying you follow up with your supplier and get the return filed. In the GSTR-1, we have to give HSN details also. In HSN details is a 8-digit nomenclature code, which is coming from the customs tariff. Based on your turnover, you have to disclose this. If your turnover is up to 5 crores, just disclose up to 4 digits for B2B supplies. And for B2C supplies, it is optional. But if your turnover exceeds 5 crores, give 6-digit codes. You have to give 6-digit HSN codes. Okay. So eventually everybody will move it. But for now, 4 digits for this may come as a MCQ for you. Up to 5 crore rupees, 4 digits. For B2B supplies, B2B supplies, 4 digits. B2C, 4 digits, optional. Above 5 crores, 6 digits. This is GSTR-1. Generally, GSTR-1 of the previous month has to be filed before filing GSTR-1 of the current month. But some exception is there. A registered person shall not be allowed to furnish the details of outward supplies if he has not furnished return in GSTR-3B. So GSTR-1, then GSTR-3B has to be filed. You cannot file current month GSTR-1 unless you file previous GSTR-1s. And a registered person who is opting QRMP shall not be allowed to furnish the details in 1 if he has not furnished in 3B of the preceding tax period. C is when a registered person to whom an intimation has been issued under 88C. We'll see what is 88C. He shall not be allowed to file GSTR-1 unless that 88C notice has been closed. Registered person not allowed to furnish GSTR-1 is return not furnished in GSTR-3B of the previous month, and a person who is opting for QRMP is not furnished 3B for the previous period, or the person to whom 88C has been issued. In these 3 cases, GSTR-1, a registered person is not allowed to furnish. So file your returns, then come here. Can I file GSTR-1 before end of the month? Yes, you can file it because latest is 11th, you can file it. But the data can be uploaded and received except in case of a casual taxable person. So GSTR-1 before the end of the month or the quarter. So we are filing GSTR-1 month for the month of September. The due date is October. So you can file between 1st October to 11th October. The question here is, can I file it in September itself? General answer is no. Exception is casual taxable person when he's closing down the business. Cancellation of GST at that point of time. In such cases, they will file it. And if you do not have any transactions, still should I file it? Yes, still you should file it. You should file a nil return. A nil return is a very important return so that you are showing that yes, there are no transactions. A person opting for voluntary cancellation need to file for active period. And in case of conversion from normal taxpayer to composition taxpayer, file GSTR-1 for the period for which you were a normal taxable person. What are the contents? GSTN, legal name, aggregate turnover, tax period, HSNY summary, documents issued during the period. What are the documents you have issued? What is the numbers? Like you should have issued credit note, debit note, sales invoices. All of the numbers have to be issued. Details of advances received because GST is payable even on advance for services. Then taxable supplies made to B2B registered person, taxable supplies made to unregistered person. Now for unregistered person also, if the value is more than 2.5 lakhs for interstate supply, you have to give invoice wise details. For unregistered person who is making a interstate sale, there you have to give value above 2.5 lakhs. You have to give separate disclosure for zero rated supply, deemed exports, nil rated. So many details have to be given because what is taxable, what is not taxable, everything has to be disclosed. That's why it has a lot of details here. You can make amendments also. Last month I had mentioned invoice number 002 instead of 003. You have filed the return, you can amend it in the subsequent month. Now, invoice wise details, when I say any B2B supplies, because the recipient has to claim the credit, so there you will give invoice wise details, correct? Because you're making a B2B supply, but for both interstate and intrastate suppliers, correct? But if you're making B2C supplies, if the value crosses 2,50,000, then you will give invoice wise detail. Okay. If you are giving any to a B2C who is not having a GSTIN, so it is not required, right? But when they are saying that if you are doing any interstate transaction about 2.5 lakhs, then give invoice wise details. And you can give consolidated, all the B2C put together for intrastate supplies. For intrastate supplies, there is no limit. You can give consolidated, give rate wise, saying intrastate supplies made to unregistered person, 5%. 12%, 18%. So rate wise, you can give details. And B2C interstate supplies made to unregistered person less than 250, you can give again consolidate. Clear? Invoice wise, B2B for any value, because if it is B2B 10 rupees also, the recipient has to get the credit. So you will give invoice wise details. But if it is to a B2C, then if it is interstate, if it is more than 2,50,000, you will give invoice lines. And if it is B2C interstate less than 2,50,000 consolidated, and B2C intrastate, any value 5 lakh, 10 lakhs also, it will be consolidated. Clear? This is same repetition. Amendments, same table 9, 10, any amendments has to be given in the table itself. You can do a rectification by when? If there is any error in your GSTR-1, you can rectify by 30th November or the due date of filing return, whichever is earlier. If there's any mistake, identify it, rectify it, because the recipient has to claim the credit. So rectify it. So that is outward supply. Then inward supply is what? Once the supplier files the GSTR-1, it will reflect in my GSTR-2A or 2B. And based on that, I will file the final return. Auto-generated statement, because supplier is putting all the details and then recipient will get it. So there is a new system which says the details of inward supply in respect of which ITC may be available. So in your GSTR-2B, you will have two columns. One is eligible input tax credit, one is ineligible input tax credit. So this is practically not there, but it is there in the law. So you will have to read it, saying what is eligible credit, what is ineligible credit. GSTR-2B will have two columns. One is both will appear in your GSTR-2B. One you can claim, one you cannot claim. ITC which is available, ITC which is not available. Credit which will be generally available, it will be there. Which is not available will be some special category of people who are new registered, people who have defaulted their filing, people who have claimed ITC, which is more than the limit. Those cases, the ITC will be kind of restricted and it will show as not availed. Now this rule 88C. Rule 88C says that if there is any difference in liability, your GSTR-1 is your outward sales. That should be same as GSTR-3B, correct? Your one eye cannot be more bigger than your smaller another eye. Both are eye are of the same size. So your GSTR-1 should generally be like equal to GSTR-3B. That's why the example of eye. But sometimes it happens that your GSTR-1 is more than your GSTR-3B. You have declared more, like how Abhishek was asking. I would have declared more, but I'm not paid that much. Possible. This is my declared liability and this is my paid liability. In that case, what can happen? If your tax liability as per GSTR-1 is greater than GSTR-3B, then the registered person will be intimated on the portal saying that flashlight, your GSTR-1 is greater than 3B. Kindly pay the differential taxes. You have disclosed 1 lakh. You have given the credit to your purchases to the extent of 1 lakh. In your 3B, you have disclosed sales of only 80,000. 20,000, there's a difference, pay the liability. You can agree and pay the liability with interest. Or if there is some explanation saying that last month what I did, GSTR-1 I declared less and 3B I declared more. So that rectification is coming in this month. One example. Like that, there could be various explanation you can give saying that my last year turnover was different, so I'm reflecting it now. Multiple reasons are possible. So if you can give explanation, give the explanation within 7 days, or if it's a genuine mistake, pay the differential liability with interest. Then what happened? Unless any of the above action is taken, you will not be allowed to file GSTR-1. Your GSTR-1 will be filed. The third case, what we are discussing, right? Filing, non-filing of the return of the previous month for monthly filers, non-filing of the previous quarter for quarterly filers, or 88C notice not responded. These three cases, you may not be able to file your GSTR-1 for the current month. Can your GSTR-1 be greater than 3B? What do you think? It cannot be. Why, Pooja, it cannot be? It can be greater, correct? So these cases, which I have given example that I have declared more sales in 1 and less in 3B. There it can be. How can it be? Because last month I have declared less in 1 and more in 3B. That correction, I can't do an amendment because I did not enter the detail there. So that invoice, I can enter it now. Possible, because I've already paid the tax. So such cases, my 1 can be greater than 3B. So if I'm getting any such notice under 88C, I can reply with the explanation. Okay. So we'll proceed with other forms and things like that. But what I'm thinking is we have just half an hour left. So first we'll disclose or we'll declare, kind of read the statutory updates. and then we'll come to the other returns, because that's all not very complicated. But updating the statutory updates is very, very important. So we'll first discuss statutory update, then come back to MCQ, and then disclose the other returns. See how the time permits us. The statutory update with respect to TDS and returns. TDS, tax deducted at source and collection of tax at source. Details of TCS furnished by e-commerce to be made available electronically to only registered suppliers. Okay. Unregistered suppliers of services and now unregistered suppliers of goods also are allowed to make supplies through e-commerce. Earlier, what used to happen? There used to be that if you are making any value of supply to the e-commerce, then the threshold limit will not apply and you will have to register it. But that rule got relaxed, and they're saying up to the threshold limit, even if you're unregistered, you can make supply through an e-commerce operator. So unregistered supplier of services and unregistered supplier of goods are also allowed to make supplies through e-commerce operators. Okay, till you touch the threshold limit. Once you reach the threshold limit, anyways, you have to register. So accordingly, Rule 67 has been amended to clearly bring out that the details of TCS furnished by e-commerce operators in GSTR-8 shall be made available only to registered suppliers, as the supplies by unregistered persons do not attract TCS. So whenever what is Rule 867.2 saying, the details of tax collected at source furnished by the e-commerce shall be made available electronically to each of the registered suppliers, because only registered suppliers can claim the credit. So TCS, whatever is deducted by the e-commerce operator, it will be made available only to registered persons. Okay, that's the only update in the TDS and TCS chapter. Now in returns chapter, what is the update? Additional cases prescribed when a registered person is debarred from furnishing. So we have seen 3 cases when the supplier cannot file the GSTR-1. Now there are other conditions which are getting added, which is a registered person to whom an intimation has been issued under 88D in respect of such tax period shall not be allowed to file GSTR-1. So how 88C we have read, like that there is 88D also. So if a person to whom 88D is being issued, unless he has either paid the amount or has furnished a reply, same like 88C, unless he pays the tax or furnishes a reply, he will not be allowed to file GSTR-1. What is 88D? I'll come back. But understand 88C ki tarah 88D bhi hai. And then a registered person shall not be allowed to furnish GSTR-1 if he has not furnished the details of bank accounts. Aapne registration le liya hai. You have taken registration, but you have not furnished the bank details. Then you cannot file your GSTR-1. So when you're taking registration, if you have the bank accounts uploaded, if you do not have it, take the registration. Before filing the GSTR-1 due date, whatever comes in, you have to furnish your bank details. Okay. Swati avre artha aita? Amendment very important ಇದೆ. ಇದರಲ್ಲೇ questions ಬರುತ್ತೆ. Manner of dealing with difference in ITC available, 88D. What we are saying 88D, no? That is what is explained here. What is this 88D? A mechanism has been divided, like how your GSTR-1, if it is more than GSTR-3B, you will get a question raised. Similarly, bank account is mandatory for registration. Illa registration ಮಾಡುವಾಗ bank account register ಇದಿಲ್ಲ, compulsory ಇಲ್ಲ, optional ಅದು. ಯಾಕಂದ್ರೆ just now I have incorporated my company. I have to go and talk to the banker, get all the formalities done. So there could be some time. It asks for bank details, but if you skip it, it will allow you to still register it now. Bank account is not mandatory for registration. Okay. 80D, what does it say? Like how 1 is more than 3B, notice baratte. Ade tara, if your GSTR 2A, basis which you're claiming the credit, if your 3B is more than 2A, then 88D will trigger. Simple. Ishtu doddu ಬರ್ದಿದ್ದಾರೆ. But it is all simple that 88D is when you claim credit in your 3B more than your 2A, then in your 2B, because now 2A has been replaced by 2B. If the ITC availed in 3B is more than 2B, then in such cases, adu esto percentage they will specify. If it increased by some specified percentage, then you will get a notice, give an explanation saying that previous month's credit I've claimed it now and things like that. Then within 7 days, if you reply, because the time limit here is very crucial. Both the cases you have to respond within 7 days. Otherwise, they will come recover it and block your GSTR-1. Okay, that is 88B. Only these two updates in your GSTR return filing. So if a person is making interstate supply, he will have to take registration compulsorily. Correct. Then how an unregistered person can make supply through e-commerce? See, when you're making supply through e-commerce intrastate, okay, so the reason why they have done is there is something called as quick commerce now. That is also e-commerce, but quick commerce, like this Zepto, Blinkit and all they've started. They wanted more vendors. Now these vendors said that because if I have to come to you, I have to take registration, I will not come. So these quick commerce companies went to the government saying that, boss, these small fellows will not do any interstate stuff because I am only not selling interstate. If they are doing interstate, tell them to register. But I'm delivering in 5 minutes. I cannot go from one state to another state. So why are you troubling them? Tell them that even if you're supplying to e-commerce within the threshold limit, you please supply to me. They will charge. Anyways, they are not doing any interstate supply. Permit them. So they permitted such persons who are under quick commerce to give this intrastate transactions. Now, if these fellows become smart and then go to Amazon and things like that, then they will have to register. So as long as they're doing e-commerce intrastate, they don't need registration. Very valid point, Abhishek. E-commerce need not take anything. E-commerce only have to take a declaration saying that, yes, every year my turnover is below the threshold limit. For goods, it is 40 lakhs. That's quite enough. Now we'll understand QRMP, then we'll go to MCQs, then come back to other aspects of returns. Normally, taxpayer with aggregate turnover up to 5 crores may file their GSTR-1 and 3B quarterly. So QRMP, such a happy gentleman he is, he will get the option of QRMP if his turnover is up to 5 crore rupees. Above 5 crores, you are big enough. Don't come and crib to me saying that monthly you cannot file. When your turnover itself is annually 5 crores, you should file your returns monthly. Okay. No interest is applicable if 35% of the challan is paid by the 25th of the succeeding month. So you will not charge interest also if 35% of the tax of your previous quarter you're paying automatically. So you don't have to do calculation. That's an option. Or you want to do calculation, you can do it. You either pay 35% minimum or do the actual calculation. And you have to file IFF, which is an optional facility. Because if you have B2B suppliers who are shouting, give me credit, for them, you can file a IFF. GSTR view to be provided every month. They will also get GSTR-2A. Quarterly GSTR-1 and 3B may be filed through a simple SMS also. Then monthly payment to be done by a simple challan. That is what I was saying, 35%, by doing this option. 35% is paid in cash under second option. Under first option, you can do a self-assessment saying that how much is your supply, how much is your purchase, do that calculation and pay it, or don't do that calculation also. Simple 35% of the net cash liability of the previous, what is the file 3B, other than 35% cut kondo. Pay that much and be happy. No interest will be levied. Okay. No payment is required if you have no liability for the month or your balance in cash ledger is sufficient. So much facility they are doing for a MSME sector because less than 5 crore will be MSME sector. They're saying you don't have to do calculation, just pay 35%. Now, when you calculate 35%, that much of credit is lying in your credit balance and cash balance put together. That is also sufficient, right? Different GST on same PAN may file monthly or quarterly in different states. Unlike composition taxpayer, where if you're doing composition in one state, all the states are already composition. But QRMP, if you have multiple registration, one state you can do monthly, one state you can do quarterly, no problem. Each registration is separate. This is very important. This is in contrast with the composition taxpayer. Composition taxpayer, Uttarakhand, I am a composition taxpayer. In Karnataka, my turnover is more, I am a regular taxpayer. Fine, is it possible? Why not possible, Swati ಅವರೇ? Unmute ಮಾಡಿ ಹೇಳಿ.
Sir, if one registration is in composition, then all must be in composition, right, sir?
Correct. So one composition, if you opt, everything has to be composition. If you're saying, no, I need composition one, not possible. Everywhere it should be regular itself or everywhere composition. But under QRMP, atara illa. QRMP, one can be regular, monthly filer, another can be a QRMP person. Okay. Then GSTR view to be provided both manually and quarterly. You will get GSTR-2B because your supplier, how they are, based on that, you will get the GSTR-2B. Scheme opens on 5th December 2020. Since 4 to 5 years, it is running smoothly. Fine. Any doubts in QRMP? Simple, right? Okay, we'll go to MCQs so that if there are any doubts from MCQs, we'll get to know and we'll come back to the relevant portion. The details of outward supplies of goods or service shall be submitted by when? Can a supplier voluntary opt out of QRMP? Yes, Bhumika, he can opt out. Voluntarily, it is voluntary opting in and voluntary opting out also. Correct. Both the case it is possible. Question 1 is A, 11th. Correct. By 11th, you have to submit it. That is in GSTR-1. Question number 2. T. Correct. All of the above should include invoice, credit note, debit note, and any revised invoice. What is the value for collecting tax at source? Whatever is the sale value. Whatever is the value of sales on that TCS is collected. 1% of the sales value. GSTR 2A, correct. 2A or 2B. Now you will get 2B, so that is also correct. Fourth one, D, correct. Whatever credit will take, it will go to the electronic credit ledger. Fifth one, take your time to read it. Question number 5, Mallu Jadar bro. Unmute ಮಾಡ್ತೀರಾ?
Yes, sir.
Why it is B? Details of outward supply shall include details of
Debit
debit
note.
notes, credit notes, revised invoice.
Yes,
Correct.
sir.
A is wrong.
The commissioner may extend limit of GSTR-1 submit ಮಾಡೋಕೆ extend ಮಾಡ್ತಾರಾ sir date?
ಹೌದು. 10th is the due date as per the law.
Yes, sir.
And then it is actually we are filing by 11th. How we are filing by 11th? Magic show, na? So commissioner has extended. So A is also correct. Actually, law is saying 10th, but there they have a provision that commissioner can extend. So the commissioner has extended by 11th for few states. So that is also correct. C.
Okay, sir.
C is correct. Huh? True or false?
The details of outward supply shall be submitted in form of GSTR. ಇದು correct ಇದೆ sir ಇದು.
So all are correct. So correct answer is D.
Okay, sir.
Hmm. Okay. Next. This is tricky, huh? Sixth one, on real-time basis. So you can upload, once you file it, I will be able to see it, is it? No. Real-time basis ಅಂತೇನಿಲ್ಲ. You should file it, and by after the due date, you can download it. It is not real time. You can real time upload it, but you cannot submit it. Submission, once you do, it will always be available to the recipient after the due date only. Once you do the data entry, it is not be available. So correct answer, it actually not real time in that case. Once you submit it, only then it is visible. Just to do data entry, it will not be visible. So that's why they've kept a uniform thing saying that GSTR-2A will be available after the due date of GSTR-1 only. Okay, so after the due date only, it will be available. Simple. Seventh one, we have to file 3B by the 20th of the succeeding month. Eighth one, eighth one, B. It is not B because QRMP, composition taxpayers, I said they will file the returns annually. Annually is only 1 year. Only one option is there. So they will file GSTR4. So GSTR4 we didn't disclose, but this is a revision. You are expected to know it. GSTR4 has to be filed on an annual basis by the 30th of April. Okay. Correct. PMT08, that payment what is to be done, that is on the 18th. वो confuse करने के लिए ऐसा question है पूजा. It is on the 18th of the end of the quarter. Swati, B correct, A correct ilva. Why no? A is also correct, right? Because can you file the return without payment? You cannot file the return without payment. Unlike income tax, where you can file the return without payment, in GST, whatever tax due is there, you have to pay it. Only then you can file the return. So you have to pay the taxes and then file the return. So A is also correct. B is also correct. So correct answer is C. What is the last day or time limit for rectification of GSTR-1? Correct. 10D. Return can be rectified before the 30th of November or the due date of final annual return, whichever is earlier. The first return has to be filed when? Eleventh one, what's the answer? So what period will the first return be? It will be from the date he became liable for registration till the date of grant of registration. That will be the first return. Not last day of the month. So till the grant of registration, that will be treated as first return. Find the correct match of the annual returns to be filed. 12 B करेक्ट. इनपुट सर्विस डिस्ट्रीब्यूटर के लिए जीएसटीआर नहीं, रॉन्ग है. Next objection, Abhishek Swati. Composition taxpayer या compounding taxpayer, they will file GSTR 9 है. Okay, composition taxpayer will file GSTR 9A. ठीक है. Or three more questions. Final return. When should they file the final return? On question number 13, C. Correct. 13C is correct. 3 months from the date of cancellation or date of order of the cancellation, whichever is later. Question number 14, GST practitioner. Fourteen one D. Correct. All of the above can be done by the GST practitioner. Last question. Annual returns. एनुअल रिटर्न्स फाइल करेंगे तो फिर कितना लेट फीस लगेगा? Failure to file annual returns within due date attracts a late fees of 100 per day up to 1% of his turnover. Okay? Too big, no? Answer, Pooja, is not 15C. It is 15A. It is 100 rupees per day up to 0.25% of the turnover. Not even D, Bhumika, it is A. Okay? So those were the MCQ parts, and that was on the returns. Any doubt specifically you have, we have a problem solving session specifically on the Sunday. Please do attend. We will do a lot of solving because a lot of people you were asking questions, how to solve papers. We will solve problems along with you and we will discuss this there. Okay. Good with the returns, TDS and interest. So we've covered so many. You realize that in 2.5 hours, we can do so much things. So similarly, if you concentrate for your exams, even a little time, if you concentrate, is good equivalent to a large amount of time. Sure, Abhishek. I have a slide on 2A and 2B difference. I will share this slide today itself. You can have a look at it. And you can also ask me the same question on Sunday, please. Rank will not be considered for separate group. Swati, you will not be considered. So you have to apply both the groups together. Think of it. If your aim is a rank, write both the groups together. Okay. Thank you very much. All the best, everyone. See you on Sunday.